All right, welcome everyone to our May Lunch and Learn webinar for 2024. We're so glad that you could join us either for the first time today or if you're a regular, thanks for coming back and spending your lunch hour with us. We did take a break in April, so if you thought you missed a webinar last month, you didn't. We did take a break, but we are back with a new webinar today. And we're going to be talking about the do's and don'ts of filing an insurance claim. My name is Sonja Hodis. I'm a member of the CCI Huronia Board of Directors and your moderator today. I'm also a condo lawyer. And I'm joined today by a great panel of speakers who have graciously volunteered their time today, as well as their knowledge and experience. So today we have two property managers, Debbie Dale and Jennifer Beaver. They are not strangers to our webinars. They've been on our webinars before, but we've got two new guests today. We have Phyda Kim, who is a claims adjuster, and Tony Esposito, who is a claims manager, and they're joining us for the first time, so give them all a big welcome. And thank you to all of our panelists for joining us today to discuss this important topic. And speaking of people that we want to give thanks to, I want to take this opportunity to give thanks to our sponsors and the sponsors of our webinar series. And I'm just going to share my screen so that you can see their logos. So thank you to Integrity Property Management, Nordic Windows and Doors, Select Path Insurance, Aaliyah Associates Condominium Lawyers, and Aegis, which was formerly known as Macintosh Perry. Thank you to all of them for being supporters of our webinar series. And without them, we're not able to provide these webinars to you free of charge. So if you want to have any more information or get any more information about these sponsors, there's a couple of ways you can do that. You can just go to our website, ccihuronia.com. And on the bottom of our landing page, you will see their logos. All you need to do is click on their logos. That'll take you to their website where you can get more information about them. You can also go on the page for today's webinar and you'll see their logos there. And once again, all you need to do is click on their logos and it'll take you to their website. So thank you again to all of our sponsors for supporting the webinar series and our webinar today. If you are a property manager and you are going to be claiming CPT credits for today's webinar, there's a couple things that you need to do. First, make sure that you put your name and company name in the chat box so that we have a record of who attended the webinar today. And then you will need to go to the CMRAO website and self-report your credits there. You do not need a certificate of attendance from us. We just keep a record in case we're asked by CMRAO if you attended. But you do self-report, and just make sure you put your name and company name in the chat box, not the Q&A box. And I just want to let you know who CCI is in case this is your first time that you're joining us. We are the Canadian Condominium Institute. We're an independent nonprofit organization that was formed in 1982. We're celebrating, we're in our 40th year of being around. So we just celebrated a big birthday, and we have a big conference in Halifax in next week, I believe it is, celebrating all that CCI does. One of the things that we really focus on is education, and that's why we do webinars such as this. And we have many chapters across the country. We have 8 alone in Ontario, and CCI Huronia is one of those chapters. If you're not a member of CCI and you want to experience the benefits of membership, you can check out one of your local chapters by going to their website directly. If you want to join our chapter, you can go to the ccihuronia.com website. If you're looking for a chapter closer to you, you can just go to the cci.ca website, which is our national website, and find a chapter close to you. And I think Debbie Dale, who is also our chat master, is going to put some information in the chat box about membership. In addition, CCI National has a resource center available on their website. You can link to it through our website, but this is a resource center that has a great deal of material available, and it's material that has been collected from across the country, from all of our chapters from coast to coast. So if you're looking for some information on a condo-related issue, this is a great place to start your search. Also, CCI Huronia has a Facebook page, so don't forget to join our Facebook page and like us. We also have a LinkedIn page, and we are now on Instagram, so we're expanding our social media. So please join us on all of those platforms. And if you want to get notification when our webinars, which are being recorded, are posted to YouTube, you can just subscribe to our YouTube page and that way you'll get notification when a video has been posted. We're really trying to increase the numbers on our the subscriber numbers on our YouTube page. So if you haven't subscribed, please go on to our YouTube page and subscribe. We would really appreciate it. And the benefit is you get notified when videos are posted. Just a reminder today that the information that you're being provided is general information and it may not apply to your specific fact situation. So if you're a condo director and you want to use the protection of Section 37 of the Condominium Act, you do need to get an opinion about your specific fact situation from your own professionals. The webinar today is not intended to provide you with opinions that protect you under Section 37 of the Act. In addition, because this webinar is being recorded and people will be watching it at a later date, all the information in this webinar is current as of May 24th, 2024. Things do change. So if you are wanting to apply the information you received today to your situation, it is a good idea to check with your professionals to make sure that it's still applicable. And let's get into the topic that we're going to talk about today, which is insurance claims. And we've done many webinars in the past on condo insurance, and you can find those webinars on our website or on our YouTube channel. And we've talked about how condos have an obligation to purchase insurance, what type of insurance you need, why you need it. And during the last sort of insurance crisis that we had, which was not so long ago, we had many discussions about what condos can do to improve their chances to obtain insurance in the market, and especially when there was reduced availability of providers, and to manage the ever-increasing costs of insurance. But we've never really had a deep dive into the issue of making a claim against your insurance policy. Now, nobody wants to do that, but the likelihood is that you are going to, or you've already done it at least once or twice. So today what we're going to do is we're going to focus on the claim side and the do's and don'ts of what to do when you're thinking of filing a claim or you are filing a claim. And we're going to look to our panelists to provide us with some tips on how to manage this process. And because our time is limited, we're going to focus on three areas. We're going to focus on general liability claims, property claims, and director officer liability claims. So if you have any questions during the webinar, put them in the Q&A box, not in the chat box. Please put them in the Q&A box. We're going to try our best to get to as many of those questions as we can during the webinar. But to start us off on our discussion, we're going to start off talking about general liability claims. And Tony, you're going to take a few minutes to explain what types of claims fall under the general liability category. Tony, take it away.
Thank you, Sonja. Hello, everybody. So yeah, jumping right into it, talking about CGL and general liability. Everyone has a different name for this type of coverage, whether it's commercial general liability, CGL, GL, third-party liability, or simply a lot of people just refer to it as slip and fall coverage. But slip and fall coverage covers a lot more than just that. The key word in this coverage is liability. The coverage isn't meant to be a first-party coverage. It's meant to protect the condos when they are considered to be legally liable for damages to a third party. So while most will immediately think of the big settlements that might become awarded to the person who's suing, the often forgotten portion of this is actually the defense costs, which also could be substantial in many cases. CGL policies are typically split up into 4 different sections. And again, just to reiterate what Sonja said, a lot of this information is general. I encourage everyone to review their own policy to understand the full details of it. And of course, there's going to be exclusions and limitations that would apply to most policies out there. So the 4 sections of the CGL policy would be coverage A, which is the bodily injury and property damage coverage. This coverage is exactly what it sounds like, is for claims that the condo may be held liable for causing bodily injury or property damage to a third party. It's the most commonly used for condos and would pick up claims that arise, for example, if a visitor were to come to your property, slip and fall on some ice, or a spill in the lobby, and sue the condo for their injuries. On the property damage side of that, we often see the most frequent one in condos is parkades. I'm sure a lot of you have seen claims in the past where a driver claims that the gate failed and damaged their vehicle. In most cases nowadays, there's cameras there that show that they actually struck the gate. It wasn't the gate that failed. But nonetheless, that property damage is a lawsuit that could be applied and provided coverage for. The other three coverages under the liability are not as frequently used, but they definitely do come up. Personal and advertising injury, which covers events such as false arrest, wrongful entry into or eviction, advertisements that may be slanderous. In condos, however, most commonly for lawsuits that allege that there was libel publications, oral or written, made by the condo. Then there's medical payments. There's medical payments is a little bit unique where liability and fault does not typically have to be proven. It's basically someone got hurt on your property and you're volunteering up that coverage to the injured party for their medical expenses. And then finally, there's tenants' legal liability, which, to be fully honest, it's generally included in liability policies, but I typically don't see it happen in condos. And what that coverage is for damages at a premise that is rented to you as the condo, and you're legally obligated to pay for it. So in most cases, condos aren't the tenant renting out another space. So again, that would explain why we don't typically see it. But nonetheless, that's usually packaged into that liability package. And back to you, Sonja.
Thanks, Tony. So speaking of slip and falls, which is probably one of the most common ones we see, we've got Jennifer Beaver with us today, and she's going to talk about a situation where she had to deal with a slip and fall claim. Jennifer?
Thank you, Sonja. So yeah, this slip and fall is definitely something I'm sure most experienced managers have seen in their professional career, and it's one that we continue to navigate. In this case, though, it was a smaller townhouse community located in rural Ontario. The complex does not have on-site staff, and the slip and fall happened in March. And the reason why the slip and fall happening in March is really important is because that's the freeze and thaw kind of period. So when you have nice sunny day, the snow from the winter kind of melts over the sidewalks. And then sometimes overnight you get a nice little dusting of snow and makes everything really pretty. But now you have somebody who walks out of their home onto the sidewalk and they slip and they fall on that situation. So in this case, we were lucky enough to be advised of it in advance, when the event occurred, which meant that we were able to collect a lot of information. So the information that we collected or examples of were things like pictures, contractor logs, property inspections, witness statements, and then we created a timeline of events and then ultimately an incident report that we shared with our broker just to give them a heads up that the event happened and that there is a potential claim coming down the pipe. You never know in these situations. So we do always want to just kind of keep a record of what happened and document really, really well. Thereafter, the corporation was served with a statement of claim requesting a significant amount of money. And therefore, we are now in a position of needing to consider whether or not we go through insurance. Ultimately, of course you are. You're going to contact your broker. You're going to let them know about this statement of claim that has come through for the corporation. Keep it in mind when you do get these statement of claims, a lot of times it includes everybody that they can capture. So it will typically include the management company. It will include the corporation and the snow removal contractor. Your goal right now is to ensure that the entities are protected, including the corporation. And you should also advise, if you're a property manager, you should advise your senior staff of the claim as well and ensure that they follow the steps that they need within their property management company to protect their liabilities. One thing that I would say from a don't standpoint is don't erase any evidence and don't discuss the details of the situation when the claim comes in. Keep it really fresh in your mind of all the details and the things that you've collected and diarize it, but don't get into the office gossip or the conversations. Just stay really true and pure and to what actually happened so that it doesn't cloud your judgment later on. Because sometimes these claims can come in a year or a year and a half or just under the 2-year mark before they put it in front of you. So you need to make sure that that information is protected and really clear. From the corporation standpoint, you also need to ensure that you let your you update 2 important documents. You do have an obligation to disclose. So you want to make sure that you're updating your status certificate under the legal proceedings and claims section. And you want to make sure that you are updating your periodic information certificate under that appropriate legal section as well. I will say, as Sonja had mentioned earlier, relying on your experts in these categories are really important. We always tip our hat to the corporation solicitor to say, hey, heads up, there's a claim that's come in. We have to update our status certificates and our periodic information certificate. Here's our suggested wording. Please tweak or approve accordingly, just to ensure that the corporation's obligation to disclose is done according to case law at that time. And otherwise, I think I will leave it there for, I believe, Sonja, I'll send it back to you.
All right, thanks, Jennifer. And those last 2 tips are really good tips because I think we forget about that. We forget about how these claims can impact other corporate documents that we need to do and deal with on a monthly or a quarterly basis. So that's a really good tip. Thank you. All right, so now we're going to pass it over to Phyda, who is a claims adjuster. He's the guy who's going to come to check things out when a claim is made. And Phyda, from an adjuster's point of view, what do you wish people would do or not do when they file their claim?
Thanks very much. And coming from the claims perspective, first of all, no claim is the same. But when it comes to investigating a claim on the general liability side, what we do like to see is an incident report. And I was happy to hear that Jennifer does practice that at her office there. And that's one of the things that we like to see. Some of the things that we want to see in the incident report are exactly when the fall happened, if we're talking about a slip and fall, and the exact location of the fall. Is it on common grounds? Is it somewhere else? Part of what we like to see as well, or part of the dues, is to document the weather. What was the weather like that day when the fall was reported? And also to document the scene conditions. If we find out about a fall incident on the same day, we pop our heads out and look at it and say, okay, was there salt on the ground? Was there sand? Was there ice melt? Was there any sort of de-icing material? We also want to preserve evidence. So evidence in the form of if the building or if the corporation or the property is equipped with surveillance, we want to preserve that footage. We want to take our own photographs, make sure they're date stamped, and also start to gather our information in terms of witnesses. So when we talk about witnesses, we also want to know who they are and their contact information, because a lot of the challenges that we have is we get a witness, but there's not enough information, we can't track them down. So on the incident report, those are some of the things that we like to see that are captured. The second thing that we want to do is also, as mentioned by prior panelists, is to report the claim. Do not delay, because there are some guidelines and timelines when it comes to reporting a claim. There are some changes that were implemented under the Occupiers Liability Act when it relates to snow and ice, and it's changed. We have a 60-day window to put someone else on notice, and it has to be by registered mail or personally serving them. So those are some of the things that we have to keep in mind. It used to be a wide open window of 2 years to actually file and serve a claim, but we have 60 days to actually find somebody else who might be responsible and pass the liability. So please, yes, report to the insurance right away, because delaying it could also potentially lead to coverage issues. And the last point about dues for general liability is you want to cooperate. Oftentimes we're all busy, and it's hard to carve out some time to meet with the adjuster, to meet on site, to show the adjuster where the fall occurred. But these things are absolutely critical when it comes to the investigation side of a liability claim. There are going to be documents that the adjuster can request, such as meeting minutes or work orders, site maps. Those documentations are requested for a reason, and I know it's time consuming to get, but it's very critical for us on the investigation side so that we can see where we might be able to potentially spread liability or pass liability altogether, and therefore minimize any claims to the corporation. Some of the things also when we think about the cooperating with the adjuster aspect is oftentimes the adjusters will come out and they'll want to take a statement to get a timeline on what happened. What are our regular processes and procedures? What do we do when there's less than 2 inches of snowfall accumulation? Some of those details that are not captured in a contract agreement with a maintenance contractor, those are some of the things that we'll want to cover off in a statement. And also, if there are other people involved, so if we have any on-site managers or somebody from the board maybe who witnessed it, let's try to make them available for us to interview as well, so that we can get a full picture of what happened in the loss. And then some of the don'ts. Don't not report. I think we mentioned it earlier. Please report them to your broker right away so that we have every opportunity to investigate at the onset. And do not admit liability, of course, until we don't know what's going on. We don't know all the details, so we don't want to admit liability. And we would suggest not trying to handle yourself. So not trying to handle the investigation or put things or minimize things. Bring the claim forward or report it to your broker so that we have every opportunity to investigate that potential incident to the fullest.
Thanks, Phyda. And there was a question in the Q&A about, it says, should we report a fault to an insurance company within 60 days? And you want to just clarify that your answer is no, not 60 days. It's
right away. We have 60 days to put somebody else on notice if we feel that they're responsible. And our typical scenario would be we hire a maintenance contractor and we got to put them on notice within that 60-day mark on our first time that we find out. So if we find out January 1, we got 60 days notice or 60-day timeline to put them on notice by registered mail or personally serving them.
All right. So immediate reporting is what you're asking people to do. Great.
Yes, please.
Okay, let's go back to Tony. And Tony, is there anything as a claims manager that you want to add to this discussion about general liability before we move on to our next section?
Yeah, thank you. I think Phyda and Jennifer really touched on majority of the points here, but one thing to also remember is at the time of an accident, you may not have all the information. So try to really avoid accepting or admitting any fault. There could be a loss. It may look very straightforward that, oh yeah, we should have shoveled that walkway or should have cleared it better for them. But there could be other contributing factors. So avoid any kind of acceptance or admission because that could jeopardize coverages. And also, not so much a do or don't, but just something to keep in mind is a lot of times you may not agree with what the lawsuit is being placed against a condo. You might think it's frivolous or a complete nuisance that they're even attempting to blame this, but it still has to go through that process. So we often get complaints from boards saying, well, can't you just close this file? And unfortunately, we are not in control of that file. It's the third party who's going through the courts and suing the condo that really dictates whether or not they're going to drop the action or not. So even though it might be a complete quote unquote waste of time type claim, it does still have to go through the process. There's still going to be costs incurred, unfortunately. And it just has to go through that process to make sure that the condo is best protected.
All right. Thanks, Tony. So we're going to move now on to property type claims. And Tony, I'm going to come back to you to, again, just explain what kind of claims fall under this category of property claims. And then we'll hear from our other panelists about experiences and some do's and don'ts. Tony?
Awesome. Thank you. I think it would be a quick summary just to say water and fire, and that'll capture a majority of what everyone has experienced that's on this chat today. But just to go a little bit more into it, to give you a little knowledge about property claims or policies, property is by far, as we know, the most common claim that we see in condos across the country. Most are written on what's called an all risk basis, which means basically, unless the policy specifically excludes it, it would be a covered loss. Now, there are exclusions that identify the different perils that are excluded. There's exclusions that identify different types of property that may not be covered. With that being said, it's important to understand how a policy responds. Most property insurance policy that you'll be dealing with in a condo will be on replacement cost basis, which means that the settlement would be based on replacing old with new for like kind and quality materials. So quick examples, if you have a laminate floor that's damaged, you'd get a like kind quality laminate floor put back without accounting for depreciation. Another commonly misunderstood aspect for property policies is that in many cases, the cause of loss is not actually covered. So instead, the coverage is for the actual resulting damage from the insured peril. So another quick example of that, say you have a supply line that provides water to your sink. The line itself fails due to age and causes damage to your home. The line itself in most policies would not be covered, as it would be excluded for wear and tear, but the resulting damage that came from that burst pipe would be. So just keep that in mind, because I know a big problem within condos nationally is that many treat them as a maintenance policy and wait for a covered claim to avoid the regular maintenance that comes with it. And it could cause quite the inconvenience and nuisance for all those affected by the loss. To fully understand what is and isn't covered, I encourage everyone to take a look at their policy. The wordings can be pretty daunting, just a heads up, pretty boring as well. So feel free to lean on your broker to have that discussion, to understand what isn't covered before you're in the position of an actual loss.
All right, thanks, Tony. And you started off your discussion with the two big ones, water and fire. And Debbie Dale, our property manager, is going to talk to us about one of those, which is very common in condos, a water damage claim. Debbie?
Yeah, thanks very much, Sonja. And thanks for the opportunity to share today and your tireless efforts, Sonja, the ideas of the CCI Huronia Education and Events Committee members and the support of our sponsors in facilitating these great webinars. I'll speak briefly today about property damage insurance claims with the focus on do's and don'ts. I've been able to assimilate a few ideas gleaned after decades in the property management industry that are based on my perspective from the property manager's role. I think back to a Toronto condominium water leak that taught me a lot through experiencing the many moving pieces of who does what and how complicated a flood can be. An owner was running a sink of water in her kitchen when the phone rang, and an old friend had huge news to share. As the call continued, the owner realized she would be late for an appointment, so she ended the call, grabbed her keys, and rushed out the door. The tap water eventually overtook the sink drain, and the 21 suites below sustained water damage in their kitchens. Unfortunately, the owner that noticed the water dripping was 21 floors below the suite with the tap running. On entry to the unit with the flooding sink, it was determined that the shutoffs under the counter did not work. Imagine the corporation's insurer, a clear act or omission was the cause, 23 different adjusters, 8 different insurers, 22 owners, and the corporation, so a rather large group of interests and rights to handle. Based on this experience, I'd offer the following 8 do's. Number 1, do document heavily. Who, what, how, when, where, photos, timelines. It's really hard to piece it all together later after the fact. And insurance processes, as you've heard earlier today, can be slow and filled with overlaps as to who pays for what and more. Number 2, have a standard unit bylaw. Take out flooring and countertops. And some are considering taking out cabinetry now from the corporation policy. Number 3, stay neutral. I believe that Jennifer spoke to this. It is the role of the property manager to be professional, and that requires neutrality in difficult situations. Be supportive but neutral. Don't take on the blame. Number 4, rely on the broker for the condominium corporation for their expertise and wisdom that they have. Ask questions, call them when needed, email to confirm instructions, and lean on the broker as the go-to to unravel and intervene if needed in the claims processes. Number 5, know where the shutoffs are, of course. Get your valves exercised, have an emergency plan that is site-specific. Trying to figure out how to control a pipe flood during a pipe break is far too late and costs a lot of money. Nothing that we all want to end up having to deal with. Number 6, educate your owners about unit insurance. In the 21-story flood I spoke of, there was an owner that was uninsured. Track unit owner policy terms if you have the resources and if the owners will cooperate. If not, perhaps just an annual reminder to your owners to let them know that they do need to have insurance and to sort of trigger a bell in their heads. Number 7, remind owners of their responsibility to maintain the plumbing and other items in their units. Regular reminders are ideal. I find that sending out small pieces of information works really well, rather than one long memo that people are just too busy to read these days. And finally, number 8, water sensors. Research and share info with your owners. When wet, an alarm can be audible and/or send a message via text or email, and they're invaluable devices. And then for the flip side, to offset the 8 do's, following are the 8 don'ts. Number 1, don't commit. Don't tell an owner the source of the leak, who did what, who will restore what, or get involved. Refer all parties to their own insurance contacts. Let the insurers and adjusters work it out and handle the questions from their clients. Number 2, don't forget to charge back the condominium corporation's insurance policy deductible where possible and practical. Number 3, don't hesitate to explore the potential for an independent adjuster. Number 4, don't hesitate to ask for some legal advice if needed, and certainly letting the lawyer know there's been an incident is a go-to on your top of the list when the whole thing starts. Number 5, don't play the role of the adjuster or the insurer. They live, work, and breathe in the world of long policy clauses that most of us really don't understand, nor do we need to. Number 6, don't forget the insurance appraisal processes. In a flood, it's not that important, but in a fire, being insured for the full insurable value of the property is beyond crucial. Number 7, don't ignore the value of preserving a claims-free status and consider the impact of future premiums and ongoing insurability of the property if you file a claim or multiple claims. And the last don't, I would say, don't think it can't or won't happen. It can and it does. So plan for success and be prepared. Back to you, Sonja.
Thanks, Debbie. And I guess the biggest takeaway from your presentation there is to get that checklist out there of your do's and don'ts. Make sure you're covering all of those. So you might want to watch this webinar again when we post it on our website and on YouTube to get Debbie's 8 do's and don'ts down into a checklist. Thanks, Debbie. So Phyda, back to you. In terms of property claims, what are the types of things that you wish property managers and directors would do and things that you wish they wouldn't do?
Thanks, Sonja. So when talking about property claims, the first thing that I always say, or that I always wish people would hear, is what would we do in the absence of insurance? So we're running the corporation, a water loss happens, whether it be a large high-rise building or row housing or what have you. What would we do to mitigate damages? Because that would be number 1. That's the thing, that's one of the do's, is mitigate the damages to prevent it from further loss. And when we figure asking ourselves the question, okay, well, how far do I go? I always get that question, well, because sometimes the costs incurred are $200, and sometimes the costs incurred are $100,000 on the emergency. And how far do you go? And the best question to ask back is, what do we do, or what would we do if there's no insurance? Because I think that helps to guide us with how far we should go when we mitigate damages. So the first point, definitely a do, is mitigate the damages. If we have a leak, we got to find the leak. Where is it? And get the plumbers out and stop the leak from happening. The second thing is, as a do, is report it right away. So many times we find that the claims aren't reported right away because there is an unknown of the costs. And I think that maybe it's not known out there, but you could always withdraw a claim. So, and we see that often on the condo side, where The claim gets reported by the broker, by the corporation, and then as the investigation goes on, the assessment of damages gets completed. They realize, you know what, it's not worth a claim, and you have that right to withdraw your claim on the policy, but don't not report it in that because of a fear that we don't know what the quantum is, what the amount of damages are. That being said, do report it to your broker, but also don't be afraid of the premium, because that's what we always hear. And maybe I'm stepping a little bit outside of my role as the adjuster, but that's what we hear all the time is, how will this affect my premium? And that's a question maybe we can throw back to Tony. But again, you can withdraw your claim if the corporation or the board decides not to. As far as another do is to again cooperate with your adjuster. Gather the documentation. Most of the corporations that we deal with do have a standard unit bylaw in place, and the standard unit bylaw is what we will use to assess quantum on a property loss. And I'm not sure if everybody's familiar with what that standard unit bylaw is, but basically, in a nutshell, it tells us what the corporation will be responsible for repair after damage on the corporation's insurance side, but it also is a guideline for the unit insurers and what their insurers are responsible for. So there was a comment about the 23 different adjusters and different contexts. That is so true when dealing with condo claims and there's multiple units, is that we need to have this standard unit bylaw in our hands for review so that we know who's doing what, because there are also different contractors in place that we also have to instruct and provide direction on. I also will say during the due process on a water loss is to provide the adjuster with all the owner's contact information, and if it's a tenant occupied unit, the tenant contacts, but also their insurance information. Oftentimes there's a big delay in handling the property claims because we don't have the adjuster's contacts. So the adjusters can't talk to the adjusters because we don't know who the adjusters are. So that's one of the things that are also very important to gather right at the beginning. And then some of the don'ts would be, don't be afraid to advance a claim. I know we're moving into a market that insurance is more difficult to place, or there's subscribing insurance companies. But again, you can always make that decision to withdraw your claim if you feel that the damages are not worth it to advance a claim on. Again, don't try to handle it yourself. And when we say duty to mitigate, again, with the same question in our minds is, what would we do in the absence of insurance? And that way it will help to guide us in figuring out how far we should go in terms of mitigating our damages. And then the last note is, don't not report. Again, please report it to your broker so that we can get a jump on things very early, and also provide you with advice and guidance in navigating through that property loss. Back to you, Sonja.
Thanks, Phyda. All right, Tony, back to you. Any little comments you want to add to this discussion about property claims as a claims manager?
Yeah, thank you, Sonja. I'm just going to go to Phyda's comments there about, he referred a couple questions there back to the broker side of things. Yeah, it's important to know the process of your insurance company. So who you're working with, who your broker is, and understanding exactly how that claim will or will not impact your policy. There's a lot of services available to you to help out with those losses, and it may not be opening a claim. I know it's a little bit contradicting what was just said, but there is some scenarios where reporting a claim will impact the loss history or premiums, regardless if it's withdrawn or not. So knowing who you're working with and understanding what that setup is. As for the tips here, partnering up with people who you know and trust and do good work. Within claims, there's a lot of different parties out there, from mechanical to electrical to restoration. Yeah, there's a lot of people doing work within the building. So having the right partners to make sure that they're doing the right job, trying to keep the emergencies at a minimum so that, someone, one of the adjusters like PETA could come in there and see, okay, what's covered here? What are we going to do for the repairs, rather than just ripping up everything and now you have no choice but to replace the entire place. So being partnered up with reputable companies goes a long way. Another one I had on here is don't commit to timelines too early. We see it a lot where day one of the claim, where the adjusters are still trying to figure out what it is we're dealing with. We don't know the extent. And we see, oh, we should be back in our units by the end of the month, within 2 months. And then we find out there's permit delays, there's material shortages, other things that may arise. So just understanding fully what you're dealing with before you tell your ownership any timelines, because you will be held to it. Absolutely, you'll think it's just a general timeline you're giving, but someone will call you out on it and say, hey, you promised me I'd be back by this day. My kid's birthday is the next day. I want to be back in there. And then the last one is do try to prevent losses. I feel not enough is done on the prevention side of things. I know a lot of property managers push loss mitigation strategies, but not necessarily accepted by a lot of the ownership. Simple things such as like supply lines, regular maintenance, making sure your supply lines are changed over to braided hoses instead of the rubber ones. Although pricey, you can put in water sensors with shutoffs, so it'll detect that there's been a leak in your unit and it'll shut off water to your unit. So there's definitely ways to prevent damages from happening, which again will just increase reduce the level of anxiety amongst the owners of dealing with a claim when it happens.
Thanks, Tony. You touched on something that everybody sort of touched on, but to me, when I was listening to you, it came to my mind like one of the do's in terms of any types of these claims is really just to make sure you have a communication plan in place, right? So that you're not planning the communication as it's happening, but you actually have a communication plan in place when it comes to an insurance claim. Because from everybody's comments, you've got to be really careful about what kind of information you're communicating and when you're communicating. And so if you've got that plan in place, then it's easy to follow and you're not reacting in the emergency situation. So thanks for that, Tony. So we're now going to move on to our third area that we're going to talk about today. And it's not as common an area in terms of claims, but it does happen. And we thought it was important to highlight this area and make sure that people are aware of it just in case it does come up. And that's director and officer liability claims. So Tony, I'm going to go back to you once again, and I'm going to ask you to just explain what kind of coverage this is. And then we're going to get into some do's and don'ts, and hopefully we still have time for an example. Tony?
So D&O coverage, directors and officers, common coverage for condos. As you know, board members are volunteers who donate their time and work alongside property managers in most cases to assist the ownership with maintaining the property, ensuring bylaws are enforced, and planning for the future. Unfortunately, the decisions made by councils and boards aren't always the popular one. And even if the majority of the ownership is in agreement, it only takes one single owner to open a legal dispute for the decisions made by the board. This coverage, the D&O coverage, is there to protect those board members in these instances. D&O policies are a bit different when it comes to how they're referred to for the date of loss. When talking about the CGL policies and property policies, there are occurrence-based policies, which means the coverage in place at the time of the event is the policy that would respond. D&O policies are typically written on claims made policies. It's important to know and understand that, because that could have an impact on coverage for retroactive dates, making sure everything's in order and in place. A claims made policy means basically the event itself may have happened prior to the policy, but you first became aware of the claim during that policy period. and that's the policy that would then respond. Yeah, another commonly misunderstood aspect of, with D&O policies, it's, an example for you. I totally got lost in my notes there. An example for you is if you become aware of a dispute, the unit owner through his lawyer sent a letter saying they intend to file an action against you. And the letter is received, say, January 1 of 2023, but was never reported. Then a notice of civil claim is received February 2024. The insurer that was in place could take a position of no coverage in that because it wasn't reported on time. Because again, it is a claims made policy. You were aware of it the previous year, you didn't report it in time. When it finally was reported, it could have hampered their position on investigating and defending the action. So with D&Os, I would say more so than any other, it's important to report as soon as you become aware of any incident that could lead to a claim. And that requirement is usually right in the wording on most D&O policies out there. As soon as you become aware, you have to report it to your broker. But I'll pass that over for an example.
All right. Thanks, Tony. Let's go to Phyda first. And just because we're running out of time and I want to make sure we get a claims adjuster's perspective on it, because today, again, the focus today is on a discussion of the claims process. So Phyda, for D&O type and claims, what are some of the things that, again, you wish people would do and you wish people wouldn't do in these types of situations?
Thanks, Sonja. So I agree with Tony. What Tony was saying is the first thing we have to do is make sure it gets reported. Oftentimes, when handling a D&O claim, the adjuster will have to, not by choice, but it's because of the coverage issue or potential coverage issue. So it's very often that when a D&O claim gets advanced to the policy or on the policy, that the adjuster will request an investigation or do an investigation under non-waiver or reservation of rights. And that's simply because of it could be late report, it could be multiple carriers that are involved, it could be figuring out who has the policy at the time. So all those things that Tony mentioned are exactly why the adjusters may request or complete their investigation under a non-waiver or reservation of rights, simply because there's so many moving parts usually, and they just don't know which policy should be responding. So number one, as far as the do's, would be to report it to your broker, because if you don't, it could, again, potentially lead to coverage issues. Number two, again, cooperate with your adjuster. And depending on the complexity, how complex it is, or what has gone on in that particular claim or allegation, you can anticipate or don't be surprised with when the adjuster asks for a non-waiver agreement to be signed or completes their investigation under a reservation of rights. That is the insurer's right to investigate to determine if there is going to be coverage under the policy. That being said, cooperating with the adjuster will help to ensure that we know that our answers a lot quicker than having it drag out. So again, similar to a general liability, gather the information that's being requested, make yourself available for a statement if need be, and all of that will assist the insurer and the adjuster to confirming coverages under the policy when it comes to D&O claims. And then some of the don'ts, again, don't delay and do not report it to your insurance company. And again, don't try to handle the situation on your own. Please seek the advice from the professionals to assist you in navigating through the D&O claim. Sonja?
All right. Thanks, Phyda. All right. So we are quickly running out of time, as we always do. So there are a couple questions in the Q&A box that I want to see if we can try and answer that specifically relate to claims losses. There are a lot of questions that are just sort of general insurance questions in the Q&A box as well. And I just wanted to shout out to those people that you may want to take a look at some of our previous webinars, because they do address some of those questions that you're raising. But today's webinar is really focusing on the claims side of things. So we're not going to be able to deal with all of those questions, but I do encourage you, go to our website, ccihuronia.com. look at the past webinars tab, and there's a bunch of insurance webinars there that you can watch, and a lot of those questions will be answered in those webinars. And again, you can always find it on our YouTube channel as well. But there was one question that I thought was interesting for today's topic, and it says, how would you manage a claim for a water loss from a toilet leak in a townhouse complex when the resident's insurance company does not want to pay the claim and there is no standard unit bylaw? So who wants to tackle that question? Tony, go to you first as a claims manager. You probably have had experience along these lines.
I would rely on the adjuster, to be honest. Sorry.
Okay,
Sorry,
over
Pia.
to you, Peta.
Yeah, we don't see too many of those. But I think we have to go back to the original build. If there's no standard unit bylaw that's been passed or talked about among the board and the corporation, then we got to use some common sense. And I think from the claims that I've dealt with where there is no standard unit bylaw, having that conversation early with the adjuster on the other side to say, hey, there's no standard unit bylaw in place here, but this is how the unit was when they were originally constructed. And we use that as sort of our guideline when separating those costs between what corporation will pay versus what would be considered as an improvement and betterment on the unit owner's insurer.
All right.
And sorry, if I can just add one comment to that.
Sure.
Standard unit definitions are obviously the most common in Ontario, but in other provinces, there actually is no such thing. And what happens in those provinces is exactly what Peter was saying. There's a lot of common sense that has to be applied. There's situations where people are literally knocking on doors to try to find a unit that is still original, to understand what the original build was, and that's what's going to end up getting covered. But ultimately, the communication between adjusters is paramount. Being able to connect the two people usually makes a lot of the problems disappear, right? Adjusters talking to one another, they're able to sort out what's right, what isn't, and they take it from there. And even if the information being shared, from someone like PETA on a claim might be the exact same as what the property manager is telling the other adjuster, but hearing it from another claims professional, they just accept it and they move on. So it's important to include others when you're up against a wall like that.
All right. PETA, I'm going to go back to you because you talked about the timelines for filing claims and the importance of getting them, reporting them quickly. There is a question, and if you could just confirm what the deadline is. It says owner falls, doesn't report it to the board or property management. Nobody saw it. Does the owner have 2 years to file their claim?
So the owner, when it relates to, the Occupiers Liability Act is what governs slip and fall incidents when it comes to snow and ice. And this would be more of a legal question, but under those changes, under Occupiers Liability Act, it's the date of our first notice. So if the owner or resident slip and falls but doesn't tell the corporation or somebody on the board until 60 days later, our 60-day timeline starts when we first find out on the corporation side. So it's the time ticks on the date that the day that it's reported to you.
All right. And if you're at all concerned or worried about it, make sure you talk to your condo lawyer to get clarification about your specific situation. There was a question about water sensors, and I'm going to put this to Debbie and Jennifer because you probably see the result of this if there is any. And the question was, are we seeing any insurance premium discounts for condos that have installed water sensors? So Debbie, do you want to go first because you mentioned it, and then we'll go to Jennifer after.
Yeah, sure, Sonia, no problem. I haven't seen any discounts coming for installing water sensors, but that may be a thing of the future, and hopefully it will be. I think that it's a good saving mechanism for the boards to help reduce claims, of course, and we'll see what the future holds. The most recent thing I've heard about in terms of discounts is to hire a tier 1 property management company because the insurers are leaning to discounts and better rates for corporations that have tier 1 management companies, and I never knew until 2 weeks ago such a thing existed. Back to you, Sonja.
Thanks. Jennifer, are you seeing any discounts for installation of water sensors?
Truthfully, the systems are pretty new in terms of like what works and what doesn't. I have not seen any positive results from the installs. It does reduce the amount of damage that happens after a claim. So in terms of actual premium savings, I haven't seen that. But I wonder if the individual homeowner insurance would see a savings there versus the corporation's insurance, because typically the homeowner would install those in their units.
All right, thanks, Jennifer. And that's a good point, that it may not have a direct impact on your premiums, but it will have an impact on the claim costs, which indirectly will have an impact probably on your premiums down the road. So I guess we'll have to wait and see if we see any positive results in terms of premiums as these systems get installed on a more frequent basis. All right. Well, we are at the end of our time. Sorry we weren't able to get to all of the questions, but hopefully we got to some of them at least. So thank you all for joining us today. And thank you to our panelists for taking your time during this lunch hour to share your experience and your knowledge. We really appreciate that you were able to join us today. And also, once again, a big thank you to our sponsors for supporting the CCI Huronia webinars with your financial support. And I just want to shout out to Integrity Property Management, Nordic Windows and Doors, Select Path Insurance, Aaliyah Associates, Condominium Lawyers, and Aegis. And again, if you want any more information about any of these companies, all you need to do is go to our website, click on their logo, and that'll send you to their website. And don't forget to check out our website for upcoming events. We do have a webinar planned for June 21st, and we're going to be discussing hoarding during that webinar. And that's a topic that is being discussed because you've requested it. So if you have any other suggestions for topics for upcoming webinars, we're going to start planning our fall season. All you need to do is send an email to admin@ccihuronia.com and let us know what you would like us to cover. And we are also having an in-person event on June 12th at the Barrie Country Club. And the topic is electrifying issues in your condo. And we're going to be discussing safety issues around electric vehicles, scooters, and bikes, electric bikes. Tickets are selling fast, and the last day to buy tickets is May 28th. So if you haven't got your ticket and you want to attend this event, make sure you go to our website, ccihuronia.com, to register. If you want to get on our email list so that you know what's happening at CCI Huronia, all you need to do is send an email to admin@ccihuronia.com. It's free to get on the list. And that way, anything that happens at CCI Huronia, including the release of our newsletter, you'll get notification of that through this email. If you want to check out any other events that we have in the future, you can always go to our website and just click on the events page. Don't forget that the webinars always go from 12 to 1, and we always record our webinars, and we will be posting them as soon as possible. If you haven't joined us on Facebook or LinkedIn, please do so. Don't forget to subscribe to our YouTube channel. And here is a list of some upcoming events at other CCI chapters. But before I give you that list, this is your last chance. If you're a property manager, if you haven't put your name and company name in the chat box, do so. So that we have a record that you attended today. So our other chapter, CCI Toronto, is having an event on June 13th, Fire Safety, Answering Your Burning Questions. CCI Golden Horseshoe is having an event on May 30th. They're doing the Director's Course 108 session, Repair, Maintenance, and Change Fundamentals. CCI London is having their golf tournament on June 17th. CCI Eastern Ontario is doing the Director Certificate Program 104 course, Enforcement Fundamentals, on May 29th. CCI Windsor is doing insurance and claims. So if you have more insurance questions that didn't get answered today, you may want to check out CCI Windsor's event on May 29th. And don't forget that the CCI National Leaders Forum is in Halifax, May 29th to June 1st, with the conference on Saturday, June 1st. If you want to register for any of these events, all you need to go is to either that chapter's website, or you can just go to the cci.ca website, which is the national website. And on the bottom right-hand corner, there is the upcoming events section. And then if you just click on the event, it'll take you right to the chapter website for registration. So thank you again for joining us today. Until next time, I'm Sonja Hodis, and from the entire CCI family to yours, hoping you have a great weekend. And we look forward to seeing you next month on June 21st when we discuss hoarding. Don't forget, CCI is your condo connection.